Good afternoon, Joe Victor with Allendale Incorporated, closing commentary for first day of July. And seeing closing commentary, grains higher on the day, and that is money flow. You're starting to see money that is coming back into the grains, and of course we had a big acreage and quarterly grain stocks report yesterday. Started yesterday with buying the starches, selling the protein. You're seeing a continuation of that today, and that is buying the starches, selling the protein. And I remind everybody, don't forget, we've got a July 9th WASDE next Friday, and that is something that we anticipate that USDA, even though the quarterly grain stocks higher FM from a crop that was hit with frost freeze last 2009 in the fall of 2009, we anticipate that USDA, when it comes to the Economic Research Service, World Outlook Board, a 3 to 4 bushel increase. And what that's going to do is, granted, less acres than what the trade anticipated on Wednesday, but start to add bushels. What does that all mean to you as a viewer, and of course either as a speculative trader or a hedger of grains? Saying again, you get up to that $3.94 region, and you've got to be a seller, you've got to be a hedger of corn and soybeans. $9 support, at least for the near term, $9.50 resistance. Most of what the trade did today was primarily look at not only within itself, but outside markets. Crude oil down. The dollar was down big time. And we usually, when we have a weaker dollar, we have this perception that grain exports are going to increase. And I'm going to read off some stats to you and make sure you got pen and paper, pencil ready. But it comes down to where we have got grain sold at this point in time versus year ago levels. Corn up 10.1%. That is sales that we have made on old crop. Of course, say at 726,000 tons was below the trade range of estimates. But the good news is, at least for the grains, when it comes to corn, we're up 10.1%. Wheat is up 43.6%. Beans up 15.4%. The meal is up 34.8%, and bean oil resounding 70.3% more sales on the books this marketing year versus where we were a year ago. What that tells me is, again, demand is starting to kick in. Definitely in 2009 versus 2008, but with that weaker dollar, there is a great deal of difference between perception and reality. Spreads continue to look at starches and protein. One that the trade is talking about and the reporting industry is talking a great deal about is new crop beans versus corn. Before the acreage and quarterly stocks came out on Wednesday, you had the beans so much higher than corn, and we're starting to see there's a long-term channel, and respect that channel, that suggests that we may have at least one more day where we're finding a low-end support, and again, starches versus the protein. For the most part, as we say, money flow coming into this market. At the same time, keep your eye on weather. France and Germany, especially in the northern hemisphere, for wheat, too hot at this point in time. That is something, again, contact your Allendale representative, and you can find out, we find out every day, multiple times during the day, from private weather services. When it comes to the closing commentary for today, primarily higher corn, higher wheat, lower dollar, lower crude. And of course, you have to respect that correlation between the crude oil and the corn. Joe Victor with Allendale Incorporated. I should mention with the crude oil, we still have support in at $70 with resistance at $80. And of course, you can either use options and or futures. Any other trading strategies, feel free to visit the website. Joe Victor with Allendale Incorporated for the closing commentary. July 1st, 2010. We'll be with you tomorrow morning. Thank you and have a great day.